Best trade graphs. That's a good topic. Let's see what we can do with that. Is it merely just seeing some of the good entries that occur at, I don't know, second legs, first legs? This look like second leg entries like these. These happen to be some of the trades I had taken. Second leg, trading away from the peak. And although these charts have some good entries, or what appears to be good entries, do they tell us the whole story? Let's take a closer look at some of these as well. And on the left-hand side, what I have here is an entry that was taken, and on the right-hand side or the right edge will kind of tell us what happened after that entry. So we can kind of see some of it. And this one I put in here specifically, and I think there's one other, that even though the entry was perfect, it was second leg was off the water, off the male here, first leg touched on the blueberry, it only consolidated, this is what that entry is right in here, after that entry. It didn't really give us anything out of that trade. So sometimes they're very good, and then there's all the ones that really look good, second leg, inducement below the first leg, slightly late on the entry, but it performed that it is that entry right at the crossing of the 13 here. And it ran for the rest of the day there, ran this session there. Let's take a look at a few more. A nice small W after inducing after the Asian session, and the result was it ran for the rest of the session. Let's see, this one, nice Swiss yen entry, second leg, and that would have been here, and it ran for the rest of the day there. Common kind of a theme when they really work out well. This one was an interesting one because it gave a nice picture perfect second leg, quarter wood. On the left hand side will be the 15-minute, right hand side will be the 1 hour. We had a quarter wood on the second leg. That would have been in here. The second leg, and I put it in here because the second leg didn't pay out till the next day and then came back one more time before actually moving on. So even under some of the best looking entries, sometimes they don't get in. Here's a nice second leg entry after the confirmed riddle track, took off and kept going. Very nicely done. Here's one second hit to the high, actually almost a third hit to the high, and that one ran nicely down from there. And you kind of get the picture for some of them. Second leg here, trading away from the peak. That would have been on this third day of trading away from the peak, and it dropped nicely. But what makes up the best trade graphs? That's a good question, because some of us have different opinions. Is it in the setup? Is it what the level that we need to be at? Do we need to know so we can figure out whether it's the MOW that we want to trade only at a specific level, or is it that we are a straightaway trader and that constitutes getting me the best graph? Or is it strictly all about the pattern? If I know the pattern, do I really need to know levels? It's all about the pattern, right? Or is it? Does that make the best trade graph? If it's all about the exit, just tell me what the total bottom line is, and if I made, I don't know, tons of pips out of this run, does that constitute what the best grab is? I don't know yet. Or is it all about how much I'm risking to my reward? Does that make up the best trade grab? And in each case, different people are going to have different opinions about each one, because they all are valid and they all are really important stuff. My personal opinion is I like to see setups. I like to look at levels and setups because as they guide me into exactly what I'm looking for. If my setup isn't coming up and my signature happens to be second leg at level 3, and I know that's not happening at level 1 and level 2, maybe I can do something else if there's nothing setting up that day. Maybe I can do some R&D. I won't even use the H word anymore. And for different people, some of them want to trade every session, and sometimes that's going to be tough to do. All right, let's take a look. Do the setups actually matter? I believe they do. I like looking at the different levels so I can know where I am in the cycle. I think I have a stronger, higher probability with knowing where I am in the cycle as opposed to just trading whatever comes out. Let's see. Also, I tend to agree that signature trade kind of keeps me focused as to what I'm looking for and when it needs to occur so that I can track it, stalk it, however you want to make sure I can get the best trade out of it. If I'm waiting for that to occur, I have a higher probability of that occurring and working for me because I've looked at it and I've done R&D on it. But let's look at what the entries are. The pattern. If the pattern is what we look at, and M's and W's are everywhere, how do we differentiate which ones work and which ones don't? You can find lots of second legs. You can get in very close to the high of day or low of day, or very close to the higher or low of that second leg, but do they always work? In my opinion, I like patterns in line with what I'm looking for. Taking patterns randomly everywhere doesn't always pay out. It's a tough one to make. High-low. Another one. Can this be the holy grail of daily trading? If you can master high-low and get in at the high of the day or the low of the day within a few pips, you're going to make pips every day. Although now we need to take into account what? Pushes and knowing where we are so we can know if we're at the high of the day, low of the day. What other things can we confirm that with so that we can be sure we get in at the high-low? Jim going to do a presentation on that, but he seems to be a master at the high-low. I like second legs because I can't do that sometimes. So it can be different for different people. And what about the infamous drawdown? How does that really matter for us on our best trade graphs? Ideally, the smaller the drawdown, the better. Second legs, confirm, have little to no drawdown. I won't say all of the time, but most of the time. Sometimes they do go back another time. So most of the time, your second leg probably will have little to no drawdown on it, which is what it's all about. Right? So getting a good entry means having a smaller risk, bigger profit. This can all be achieved. Can all be achieved with high-low as well. What about the exits? Isn't it the end? The only thing that matters is how many pips there are. Yes, that can be true. But now some pips are going to be weighed heavier than others. Why? Scaling in gets more pips for people during their run. As a new person coming out, you may not be inclined to manage your money that well to know how to get more in it. There's certain people in here who know who are masters at it, who scale in all the way through a run, and they're going to pile in the pips. But does that constitute the best trade graph? Some would say, yes, the most pips. I did 1,000 pips out of this 150 pip run. I rule. Well, yes and no. Money management. Is that the key to the best trade graphs? Stop losses, if I can make them smaller and possible, then I can have a larger reward to my risk. And therefore, I would indeed have a very good graph. All right? Is it really important? Money management is kind of paramount. And the one quote someone said to me, it's not about how many pips you make, it's how many pips you keep. So money management is really important. Can there be a middle of the ground where some of these factors of all four setups, entries, exits, and money management combined can give you the best of all worlds? Yes, I believe so. So, what do we have as a requirement in here for what we would term a good grab or good trade grab? Paramount is patience, right? You are setting up your entries, and you're setting up what you are looking for, and now you're waiting for the market to come to you. You're not chasing. You're not saying it's running and it's going, I got to get in and now. If you're patient and you set up, the market will produce what you're looking for. You just have to wait for it to come to you. I can't stress patience enough. When you get good at looking at it and knowing what they're doing, sure, you can trade anywhere in between the range if you know how to do that from doing enough research on it. But you got to be patient to wait for your second legs. If that means you're your second leg trader on level 3 and you hit the midweek reversal this week and you may not get another trade this week, so be it. You need to wait for what works best for you that you know you're going to make it with. The next thing is you need to practice getting those entries. That's what all these demo accounts for. Keep practicing until you can nail that entry and nail that trade that you're looking for every time. R&D, what formerly was known as homework. And that's to go back to look in charts so you can see how many times it occurred. How many times over a year does what I'm looking for actually occur at where I'm looking to get it? If you go back and look at a year and look for just patterns, you'll see M's and W's everywhere. They're going to be all over the place, everywhere in the day, in different ranges, and you're going to find them all over the place. So a little bit of scrutiny as far as what you're looking for, you'll be able to see that all in your R&D. And flashcards. What does the ideal entry look like? Take enough of these and keep them by your computer, and you'll see a whole lot of good trades that seem to slip by because we weren't fully cognizant of what we were looking for. Flashcards do one thing. They get the actual image to be implicitly embedded in your mind so that just like you know what a stop sign is by the shape of it without even seeing the color, but the color helps. You don't have to have any lettering on it. Flashcards do that. So the more you look at them, the easier it gets to remember what the good setups and the good entries look like, and you'll take them. Okay, so let's look at some of them and see what some of the grabs are. I'll show you some of mine and some of the other ones. Second leg entry here. Nice W. Multi-session. Could have gotten in a little better after the first confirmed candle, a little bit late, but it ran right up to a nice 50. Nice second leg grab on the high test. This one I put in here because this one happened to be, in addition to a nice second leg, it was at level 1. The peak was here at level 3, and this was level 1. So, what do we expect at level 1? We expect an A pattern or a single leg. We do not expect it. So, if a second leg occurs, that's a gift on there. The bonus was it was at the Mayo. I couldn't pass that up. Waited on a high test because this railroad track was a little large. Came back, got in closer to midpoint, and got out relatively easy on this trade. This pair happened to run another, I don't know, after this 50, another 80, 90 pips, but I was in and out, 3 bars, great trade. That one looks like we went backwards. Okay. This one was at level 3 where it was oscillating. I don't have the 1 hour chart on here, but a nice, good long trap move on the second leg. If I was a little bit wavering in here, this long trap candle made the decision for me. After the close, got in, and it was a quick run down. Looks like I got out down here. Very nice on that one. These ones are a little hard to see. Closer to New York session, got in the shadow box, got out for 50 over here. Let's see, what else we got? Oh, I'll look at these in the questions in a minute. Second leg, got in early, right before the, this is a good trade. I got in early on this while this was middle of the candle still forming, and it was green near the top of the candle when I entered. And this is probably a while back. This was a little early. The best trade I like to wait until, 5 seconds before that candle closed, just so they don't do this on me within the last few seconds of the candle to see if it closes high. Had to hang out a little bit, but it still gave up a nice 50-pip run. Okay, what do we have here? Second leg, got in after the confirmed candle, a little bit on the high test. Nice drop. Got out on the pullback. This particular trade, I tried to trail as opposed to getting out at 50. 50 would have been down here, and the trailing came back and took when it crossed the 13. I got out on pullback. This one, these are the ideal, perfect ones I like. Come out, I'm trading away from the peak. This was in level 1, induced to go long, gave me an entry right here, and it dropped nice and severely. Right out of the gate. 2, 3 candles, I'm out. 4 candles, I'm out. This pair actually moved on, I think, another 80 pips after that as well. It made a nice run that day on the euro. Here's one in practicing kind of high-low drill, getting in before the candle closed. Nice run back down. What do we have here? A nice W. Second leg, bouncing, crossing through the male. Nice 50-pip grab. Let's see, nice second leg at the male here. I put that one in already. All right, now let's look at some trades here that other people did. You can see what they've done. Some entries, the entries here, the exits down here. Second leg, actually it's like a 22 trade. Made a first leg here, made a second leg here, and then came back again and made more and more push. Nice second leg entry here and drop. Second leg entry there. Get in right at the open after the confirmation candle. Looks like an entry, 2 entries, one here and then another one. Preferred short into second position. So, and I'm sure the second position probably came in because I saw this and helped confirm it right. Once this closed and gave a nice big trap, this person had a nice, more confident they were right. An entry off the W, a little bit late, but got in, held it for the entire run. Very nice on that trade. Multi-day, M, first leg over here, second leg here, got in on the there. What else do we have? We have W, multi this same day, a W at the low of the day. Get in, get out. So, after looking at all these charts, you tend to see second legs are very, very powerful. Steve talks about it all the time because it's basically true. You can get in on second legs and have a lot more higher probability. Couple that with, if you're looking for a particular level or particular setup, and you can get some really good grabs. All of the 4 of those points we have can easily constitute a best grab. When you start hitting them, they kind of get lost in the euphoria of having success. So, to qualify, the best grabs are the ones that you can see clearly. You've done R&D on, and they kind of get you excited about the prospect of getting this entry because you can see it forming and setting. You've waited for it, and now you've got it forming and setting up exactly like you had, and when it does exactly what you think it's going to do, you've already seen the outcome from R&D. You've done it a few times in demo, so now it's no problem taking that trade. There's never a guarantee that it's always going to work, because we can't say always. Market makers can do something different and take a different way, but you have a higher probability of success on your side because you've R&D'd it, and it's what you've practiced, and you can see it, you can spot it, you've got flashcards for it. Coupling those entries now to the next level with high-low entries to maximize your reward versus your risk is the next level to get you great grabs every time. Jim gets great grabs all the time near the high of the day. So if the market makers do something different, he can get in and still get out, but he always gets really good grabs because of that. Let's see. I don't have more trades to post from other people, but as you get better and you start taking entries, send them in. We want to see what you're doing. We want to post what you have because it's a very good feeling when you start hitting the numbers. You start hitting those trades. We can look at some other charts, but to see more charts of the same type of entries kind of doesn't, pan out as far as getting the message across. So let's take some questions about specific things in here that you would like to see. Subio had a comment. These are great advices. They help to acquire a perfect trading process. He never worries about the result of an individual trade, but he focuses on the quality of the trading process. I couldn't agree more. The process by which you go through to do your setups and take your entries and know what you go through to find them with flashcards and get prepared so that when they show up, you know exactly what to do. You don't do it without hesitation because you've seen it so many times that it works out for you. Good, let's see. If John's question, your trade is screaming towards your take profit, how do you feel about raising your take profit and bring your stop loss to positive in order to capture more of the big moves? It's a logical progression that you might want to do that, but the question is, now I need a little bit of, understanding for where I am. If I'm at level 3 and I just started a new run, I might consider that because I may have 2 days or at least one if I'm going to get a reset of movement in my direction. So I would consider at level 3, yes, putting my take profit back initially and managing that trade. If you're going to sit there and manage it, by all means, do it. If you're going to put it on and walk away, then I would say no. Manage the trade and work it so that you don't have any surprises. Thanks, Micah. Let's see. Martha, what is the broken down line on your charts? The broken down line vertically here is the date separator. Is that what you mean? Let's go back and look at any charts. I'm talking about the vertical lines here. This is the date separator. Is that what you mean, Martha? Ian, divergence on the TDI is always an extra confirmation. When you start looking at your setup, you're going to go through a series of things that help you confirm that you are right. If it's at level 3, you're going to be looking for divergence. You may look to see if it hit the previous high of the day, if it came back and made the M there, if it was a moving average near there. There are little things at every level that you are going to see that help confirm, and you'll start to see. I showed a trade where the let's see if we can run back to it real quick. The second leg, there it is, was at the Mayo. Once you start recognizing this, you can't unsee it. So then you're going to say, if I'm at level 3 and they throw me a gift like this at level 1, I got to take it because I've seen it so many times. If you homework it, then you'll get used to seeing that very much. No, the brown line, Martha says. Okay, the brown line. Oh, this is the ADR if you're referring to this. That brown line there is the ADR. It turns red when the only other lines in here, look, this yellow one is a 5 moving average. I made it dotted in the 13, the 50, and the 200. She's talking about the
the other line. Keep scrolling back for a little bit. Scroll back to the other chart. Keep going back. I think one of your charts had the broken lines. It looks like other EMAs.
This one?
No. That's the 13.
This one?
Yeah, the one that looks like stair steps. Yeah, the little brown one. Yeah, that one.
The stair steps are a moving average from a higher time frame. If I'm on a smaller time frame, and this happens to be 60 minutes, since there's only one candle per 60 minutes that's comprised of 4 candles, that EMA brought down to the 15-minute doesn't know how to fill in the gaps. So it fills in the gaps with 4 candles to make up the 1 candle from the 60-minute. So that's why they're jagged like that. But I marked on here certain things like the 13 moving average on the 60 minutes, so I can kind of see what it looks like there and what the 13 looks like or the 5 looks like on the 60 minute as well. Does it help? Do I need it? No. I added them on there some time back thinking I would like to see it, but I actually never use it. Okay, let's go back and see what these other ones were. No, the stair step is just an indicator. The same indicator I use for this one to bring the other moving averages onto my 15-minute chart so I can see what they're looking like. The dashed ones like this are my 30-minute versions, 30-minute of the water, 30-minute of the Mayo, and the blue dash, the blue heavy ones are 60-minute. Roberto, yes, patience is the precursor to it all. You got to wait for it to come. There was a whole lot of look like W's in here going down, but if I'm waiting for level 3 and this was level 2, then I'm still waiting for it to come down and give me my entry, even though this might have looked like it was something that was good. Patience is the key. Yes, David, it's tough to know when second legs will be above or below the first leg. You can only go by the second railroad tracks. If you're playing the high-low and you're using high-low to get your entry, then they may not come past the first entry. You have a choice to pass on that. Your flashcard of the best-looking entries out there will say whether it's something that you will take. If it doesn't do what you expect and your flashcard isn't the same, you may just decide to pass on it. Okay, Mel. Trap volume, if you're having a hard time seeing where there would be trap volume, let's think like a market maker. And if you were looking to trap traders, right, and punish traders, where would be the ideal place to do it? In my opinion, that would be at level 3. By the time I reach level 3 and I've got everybody thinking long, and I notice some stops out there that are above the market, why not go up there, trigger those, and pull back into the range, and then reverse the other way and trap all of those traders in there? Can you do that at every level? Probably not with the same amount of money, but level 3 probably has a lot of money out there they are trapping with. Hope that's clear. Let's see. Joe's question. I'm confused about second legs. It seems that there are different opinions on what you think a second leg is lower than the first leg or a W, or if the second leg on the M is higher than the first. Do all the DMR speakers agree on this? If so, how do I see it? Okay. You will find different types of M's. They will have different characteristics. Some are going to be inducing below the low of the first leg and railroad track back into the range like this one. Some are going to be tilted the other way. Instead of slanted down, it's slanted up in your favor. Some are going to be exactly at the same level, and some are going to be exactly the same level where it'll spike through it and come back in the range. So you're going to see a variety of different ones. The question is, are they all tradable? And do you trade them all? I tend to like two really good types. One, if it comes exactly down to the level, pin through it and come back up and give me a confirmed candle in my direction. And the second one is if it induces below and it closes below the first leg and railroad tracks right back into the range on the very next candle. I like those as well. Even though the ones that are tilted sideways away from me may have high probability, I haven't done enough homework on them to trade them all ways, because TDI is going to show divergence in that direction as well in either case. So you're going to make up your mind and flashcard what it is you are looking for. And if you're going to miss some of them because you don't trade them all. You may not trade them all. You may only trade 50% of what you see. But if at level 3, midweek reversal, and all the dollar pairs are at level 3, and 2 of them had the best looking pattern for you, you took them. The other 3 were tilted W's like on the CAD or something like that. Then bypass it. Let it go. It's okay to let it go in favor of the 2 that did exactly what you're looking for, and you got the best trades that you were looking for, and you'll get really good grabs out of them. Let's see. Managed questions. How many pairs do I personally trade and why? I look at least the 10 from DMR, and I add in certain other ones that I want to see, like the Euro Aussie, the Pound Aussie, certain other crosses like that. So I mainly want to look at the majors, because if I can understand what they're doing, then I can understand which cross is going to move. So if the major yields a good pattern, I'm going to trade the majors first. If the majors are in between where I want a level 3 entry, then let me see what the crosses are doing so I can see if I get it. I will also trade level 1 or level 2 in the direction of my bias if it throws a nice pattern. If it throws me an M pattern, level 1 in the direction of my bias short, I'm going to take that trade. If it's coupled at the Mayo, that's even better. Or another moving average is even better, like the Blueberry. Let's see what else. Nothing there. It's amazing how many people spotted that zigzag line. And I would have glossed over it looking at the candles and never even noticed it if I was looking at the pattern. Let's see. Is the Sunday, March 25th recording up yet? That's a Zen thing. Carl, you might know. I don't know yet.
Which one?
Yesterday's presentation. Is that up in the forum already?
Oh, let me just take a quick look.
We're going to do the DMR today, Jeff. So yeah, you will get biases today.
Yeah, it is. It is up.
Francisco says that zigzag line is the secret indicator. The super secret indicator that tells it all. No, there's going to be DMR tonight, Whitney. Any other questions?
Maybe do a 5 minutes break, and then we can get...
Otherwise, I'm just going to recap this and say, best trade grabs, once you start to practice and see it, you can't unsee it, and you'll gravitate to it. But your patience to wait for them is kind of critical. Now, once I know I'm getting a second leg of level 3, I'll wait for them. I'll wait for my second legs. If they don't present, then I probably won't have a trade, and that's okay because I know it's coming. There's always another trade. If you start managing your money well and use all of the factors together, second leg or a high-low entry and a little bit of risk, and you're managing it well and you can scale in and manage it, you're going to do well on one trade, even though you may have only gotten that one trade that week. So the goal is to get you to, A, be able to see the patterns, take the patterns so that you get good entries, and then the next logical step is once you start managing your entries well, work that pair for all it's worth and start scaling in so you can take more out of that one run than the average trader will. Okay, next question from Steve. Would you say that the fear of missing a trade is a big hindrance to many traders, even fear itself of loss? Yes, it is. There's two answers I have for that. Fear of missing a trade because it runs away and you saw hundreds of pips get away. You have to get past that, because you're going to see those a lot of times happen. You have to say, well, that was somebody else's trade. It was not mine, because I'm still waiting for mine. And if you are hitting your trades, that won't seem to be a problem. The fear of loss or losing is another one. And that one, people have had. If you've been in forex a while, you've been getting beat up a while, you're surely going to have fear of loss. And taking the time and patience to get good entries, and you'll start to build confidence from those wins that will kind of help that out. When you turn the corner and you understand what you're looking at and the cycle that you're trading at, what will happen is if you take an entry and they go back and do an extra stop hunt run and they take you out and they do a consolidation and give you another pattern, you're going to learn that I can still re-enter today after the next level consolidation and still make that money back up and still end the day net positive. When you get to that point, it's such a relief that you know that you don't have to have a losing day unless you were totally wrong at the level and they just did it straight away and you misread it and it just kept running and you kept trying to enter. So, but that's kind of where I think setups help. Just trading the pattern means if I saw M and it was level 1 and it was the wrong way and the straightaway burned me, then I didn't really understand the setup as to where I was. So all of them play a factor. Last question. London open on EU, EJ, EC. Drop had 3 candle reversal but not CW. I did not take. Was this a good trade? Okay. On that EU today, if your flashcard did not show something that you were looking for, then that was not your trade. It did a single leg. Some people look at where the previous level traps were and see if it came down to that level from the previous day. It may have been an area in the market where it paused. That's a little more advanced, and I think Jim covers some of that on how he gets into those entries as a next level of knowing where you are. But if it wasn't part of what you were looking for and it didn't look like your flashcard, it's okay to let it go. You have to know that those are somebody else's pips. And you can't get mad because it moved 170 pips today and you didn't get any of it. Your trade is coming. If that move on the EU took it from level 1 to level 2 after a reset, you know a level 3 is coming, one more day of rise, now you're stalking the pair and you're waiting for that multi-day M to come forward so you can get the trade. So that means we're headed for a multi-day M, midweek reversal possibly, and you'll get your trade going short for the end of the week. So it doesn't matter that you may not have taken that trade in London. It all depends on what your signature trade is, what you're looking for, and be patient and wait for it. You can't get every trade with every pips. When you get good and you learn how to, yes, it's hard to see those pips run away from you. But when you get very good at understanding where you are in the cycle and what you are looking for, then it makes sense that at level 1 or you don't, from that reset, you're not expecting a W. If they give it to you, it's a bonus. If they don't, you'll understand either it's in your signature to take or in your flashcard to take, or you say, I can't take that. That's not what I'm looking for. And go look at another pair. Um, Williams comment, there is always the next bus or train to catch to get you where you want to go. Synonymous, there's always another trade coming. So if you don't get it today, plan for what happens this week. You have to not only think about what happens today, you have to plan for the entire week. If my goal for the week is to get X amount of percent, and let's use a low percentage number, 5% profit for the week, and I missed the last night's trade, but they give me an M on Wednesday, and I make my profit up Wednesday on the M, am I mad if I reach my weekly goal? No. So I can't let one trade decide or define what it is that is going to happen and if it's good or bad for my whole week's worth of trading. Comment from Masubio, to gain confidence in a specific pattern or one of its nuances, a good practice to analyze at least 200 examples, more is better, of each nuance on the same pair, and then choose the one which gives the best comfort. This requires a lot of work, but the reward is worthwhile. I couldn't agree more. That's part of your R&D. And I know people may not like R&D, but and all the people who trade well can tell you, once you get it implicitly in your mind so that it's automatic that you can see it and spot it, there's nothing like knowing what you have coming. And trust me, as you stay with it, you'll start to understand the cycle. You'll start to understand where you are. You'll start to understand what you should expect to see happen next. And when the market does exactly that, it's a great euphoric feeling to jump in because you know you were right with what you were assessing. No problem, Roberto. It's hard to see your money going away from you. It's hard to see any pips going away from you, but you have to stay focused that what you are looking for, Bruno, you have to wait. You have to wait for it because patience is a big part of it. You set up, you did what you're looking for on homework, you did what you did in R&D, you flashcarded it. Now it's a matter of waiting to see when they do it. I know what level I have it, and this pattern occurs at this level, and I'm waiting to see if they do exactly that. Stephen, Vesuvio said, just to gain confidence in a particular pattern or its nuances, you need to look at least 200 examples and then choose the best looking nuance of that pair that gives you the best comfort. Tom's question is, how can you actually have profit or pip goals when you don't know the future? Well, that's like saying you can't plan to say, when I retire, I need to have X amount of dollars. You can still plan for what you would like to see in a best case scenario and then see if the future comes to you. You're not chasing the market. You're waiting for the market to come to you. So if you took a look at the euro and said, you know what, it's heading up, I'm waiting for a level 3M. Now you're stalking that pair. You know it's coming. It's going to do a reversal. You just don't know when. So you're waiting for that to come and show up. If you think you want to trade anything else in between before that M shows up, then go back and do some R&D on everything that happens at level 1 or level 2. Everything that happens at level 1 or level 2 after a reset, and then you'll be prepared for if anything happens between now and when the euro makes its M pattern. Micah's comment, what we repeatedly do. Excellence is not an act, but a habit. Kelly's question, following Isubio's comment, do you feel it's important to separate our flashcards by pairs? The answer I would give is there are certain behaviors in a pair that may or may not happen in all your flashcards. If the pound pairs tend to do railroad tracks more often than morning stars, and your flashcards have morning stars and evening stars, you may not see them on the pound. But if you have flashcards where you see the perfect patterns and you recognize them and they encompass railroad tracks of all types and morning stars, evening stars, what the trap candles look like, then you're probably going to spot them in either case across pairs. If you think that you want to, I don't know, focus on one pair, then pick that one pair and stick with that and learn all its nuances and trade that one. And then after you master those entries, start learning how to manage the entire run and beat it up for all it's worth. Can that be sent out? I guess I can put it somewhere. Maybe make a mantra out of it and put it in the forum, Stephen. Okay, Max. I found that it is better to not be in a trade and wishing you were than to be in a trade and wishing that you were not in it. That is correct. It's nothing like a trade going against you, wishing you were not in it. And that's harder to deal with than being out of a trade and watching it run away. You're not losing any capital on that. Let's see. Whitney's got a question. I do not understand how to figure out what percentage of profit I want each week. As Steve, that's right on the first quiz of the boot camp. Well, knowing how much equity you have, knowing how many pips you're going for, and what risk you're taking, calculate at a very minimal basis. One trade, 50 pips, depending on your risk, how many lots that allows you to take, and calculate how much percentage of your equity that is. And you can have that as a starting base for what you want to look for. Now you know if you get 2 trades that week, that's just twice the amount of profit for you that week. So you have a starting point, and you can work from there and add to your goals as your trading improves. Vesuvius got another comment. For the objective, he has found that a nice solution which works for him is for his aim to be at least break even at the end of the week. This completely eliminates any stress on him, and he can focus on the process. This is how he can frequently catch nice profits, not every day, but very often. So you have to sit and think about that one for a second. So, right, his aim is to be at break even at the end of the week. So that means his mind has already comfortable with the fact that he could have had a good trade on Monday or a bad trade on Monday, but it does not determine the outcome for his week because he knows what he's looking for the week. And he knows there's other trades coming in the week that can help him get to what he's looking for, which is at least break even, but very often more than that because he's doing other things in between to help put more things in his favor so that he's successful. Correct, Bruno. Bruno's comment, it's better to wait for the right trade and be profitable than jump in the wrong trade or the one you are not sure about. That is correct.